All right, traders, welcome to today's recap. This is Christian from its Tribeca Trade Group, and it is Monday, November 25th. So, pretty simple to kind of classify today. You see, I've got it right in front of the screen. I would say fairly risk-on day across the board. We can slice and dice the data, but I think just looking at the overall averages and what small caps did today, which the small caps were up 2.1%. That was one of the things that we talked about a few times last week, and especially in the weekend member video talking about keep an eye on small caps. But let me just round out the index performance. Q's up 1.2% on the day. S&P was up just about 80 basis points on the day for SPY. And again, you can see that right in front of you. You can see the IWM on here. Of course, here's our risk disclaimer as well. Everything we're talking about is for information purposes only. But yeah, I mean, it's, when you look at these sectors as well, besides IWM being up 2.1%, and the Qs I have in here as well, very strong. But I mean, biotech, first chart to kind of look at will be S&P, but then I'll go into the sectors. But here's here's S&P breaking out to 52 weeks highs. We had this little digestion last week. It kind of looks obvious after the fact, doesn't it? Right? I mean, you kind of see this now, and you're like, yeah, you can kind of see how strong this market is. Did he give us a couple hints last week? Yeah, I mean, a little bit. We kind of regained on Friday after, just breaking the streak of 6 weeks in a row. Market was down fractionally last week, and then kind of turned up right at the end of the week on Friday. So that was a little bit of a hint. But these things are never obvious right then, and I know everybody will try to call this always after the fact. But we did see small divergences last week, but as I mentioned, I didn't think it was much to worry about as long as we can have that one day. And that was one of the comments that I made was just one day will kind of turn this around in terms of all these little divergences that we were seeing with market breadth and advanced decline line, new lows versus new highs, and so forth. Which we saw that last week. The Nasdaq was making more new lows than new highs, but again, all it takes is one powerful day, and it kind of just resets all of those things back. So you could slice the data this way as well, and you could look at S&P 387 versus 116 advanced versus declining. But here's what I'm talking about: Nasdaq 2,000 names advancing, 601 declining. And if you look at the new 52-week lows, you could see 5 new highs, 2 new lows for Nasdaq there, and you could see even better S&P 8 new highs, no new lows. And then if you look at it more in short term, you could see pretty strong 17 new highs, 4-week highs, and 5 new lows. Which I actually like this better than looking at the 52-week. But anyway, that's just me. XBI, these names, some of these names went absolutely berserk today. But the biotech ETF finished up over 4%. I thought this VPOC had a chance to be taken out, but not in one day. So gap up and fill this. So I think that is pretty much, for me anyway, right? Like that would be a place to take profits whenever I see the target, that we've already laid out, which was that version point of control, that being taken out. That's the place for me basically to take profits. And notice how this is now overbought. My trade, of course, that I had on CNBC that I had talked about was XLV. I mean, this was a full-on, huge win. I even sent a text out, not a text, a retweet saying, "Hey, this would be a great place to take some profits." And I mean, look at this thing, very very strong in healthcare. As I had mentioned, the whole group acting very well. This is what I had mentioned. This is what I mentioned on CNBC a couple of weeks ago on Trading Nation, was that the whole group of healthcare, right? You've got like 4 or 5 different groups within healthcare, all very strong. Not only just the pharma stocks, but large cap biotech, small cap biotech, medical devices, and managed care. I mean, all of those groups, and I thought the XLV was a great way to play that. So I'll move on from that trade, but it's nice to get the call right. So what did I do today? Well, so I moaned a little bit. I want to go over the IWM chart because I did have a chart on last. I did have a trade on last week that was looking for this move that we got today, and it's just these are things to kind of realize in your trading plan. Give yourself some more time sometimes. Mine sometimes I do put on index call spreads that have a very short time frame, right? And I think I put that trade on somewhere, I don't think on Monday, but maybe or Tuesday, Wednesday of last week, and we just didn't get the move that I was looking for. The trade expired on Friday. However, I did put on a gobble gobble turkey trade on Friday. I thought that would be the right way to look for a little bit of a Thanksgiving rally. So here's the trade that I put on. Where's my gobble gobble trade? I think I put that on right at the end of the day. I did, and I talked about that in Friday's video. But I put on this is just next week because I wanted to take advantage. Clearly, I thought there was enough negative headlines and just enough of some negatives going against the market last week, even though it was just fractionally down. So I went into the 3-1-1-0 3-1-25 call spread for 530, and I took that thing off for over $11 today. I don't want to wait till all the way to the end of the week. I'm happy with making more than a double, especially when it comes that quick. Right, basically a half a day of trading from when I put that trade on, so that worked really well. A few other names, like I did own INSEE, right? And this is a name that, I think some of these biotech names in particular are difficult to hold. So what I do, and I know like one of the things that's really difficult with trading sometimes is that, when we have profits, and especially in options, it's a little bit easier, honestly, I think, in stock, because stock moves and you just kind of move your trailing stop up. If you're in options, they move. I always call them stocks on steroids. But if it reverts back, you could lose the premium just very quickly. So you could have a big gainer turn into the other way. Could actually go the other way if some negative news hits the tape. Very quickly. You could go from a very good strong day in a name to not so good. So what I do, what I try to practice is rolling out and up. Meaning take because again I think we feel like with options I think they're harder to hold, and we feel like we always have to kind of touch it, right, in terms of the trade. So if you feel like you have to touch it and it's a trade that you think has more upside to it, which I think INSEE does, what you do is you do what's called rolling out and up, or if not out, at least up. Meaning, take off the trade that you have, and I did that a couple times with INSEE. I took it off for profits, and then what I did was I rolled it out to a higher strike. So this way, I'm locking in some profits, but I still have exposure to the upside. And if you do that, you still get what's called the gamma move too. If it goes through your, if it gets up to your strike, you not only have the delta change, but you've also got the gamma working for you, the gamma working for you too, which is the change in the delta. So that works really well for me. It's kind of just gets me, out of the time for the psychological barrier that says, oh my God, you got a huge, you got a nice winner, you have to take. You got to grab the profits. If I can kind of manage it that way, where I say, okay, well, I'm locking in some of the gains, and then I'm just playing with the house money. So again, that rolling out and up has worked really well. I did that with a little bit with Eli Lilly today. That was a trade that we talked about on Friday. It did not close on the highs, but I took two targets, last one around the highs, and I like this chart, so I want to stay long this one. So I did take off the targets, and I actually rolled that out for a little bit longer. Again, just playing a little bit of psychological games in my head, just having myself kind of stay long the trade and giving it a little bit more time too, in case it doesn't just go bananas like the rest of biotech has over the last 2 weeks. So that's a lot to talk about there. I think IWM, right? So there was a really good question in the room. Sometimes when we see these things up 2%, which is a huge move, sometimes I think traders have a tendency to want to fade moves. This is not a chart that I want to fade, and I'll explain why. Right, this thing has been going inside a base basically for about a year, call it, yes, give or take. Now that this thing is broken out, I want to go with the trend. So you kind of have to forget about how much it's up and say, oh, geez, well, it's never up 2%. I want to fade this thing. I think this thing is going either to one of two places. I think first, top of value is 166 on top of the weekly chart. And then if it manages to get above there, you also have a virgin point of control up at 170. And I think this could be the next group to possibly go. We talked about two different sectors in terms of two different sectors that I was seeing some strength in the Tribeca Trade Group member video. The other one I was talking about was banks, believe it or not. And banks had a nice day today, up 1%. I like this setup. I did send it out, up 1%. So I think the banks look really strong. They've been quiet over the last 2 weeks, but JP Morgan came out to a new high. Goldman Sachs came out to almost to a new high, but broke out of that little consolidation. Morgan Stanley came out to a new high. So again, you have what's called, when you have these different sectors, rest and then go and then rest and go. That is what's known as a rolling bull market. And if you have difficulty timing some of these moves, that's why we did that trade last week. As I said, I wanted to get a little bit of beta, and you just basically go long the S&P. All right, so we'll see what we get for the rest of the week. I do have to run, so this is going to be a quicker than usual video, but it definitely risk on day. If you look at the names that underperformed, they were down slightly on the day. There was some option activity and some more speculative stuff like AUPH. Keep in mind, again, my view on option activity, sometimes it's very helpful, but other times, like, when the whole market goes up like this, it doesn't really matter. What if you didn't necessarily need option activity, but two names that we talked about on Friday, HLT, which saw option activity, also MAR. Another name that saw a lot of option activity on Friday was Amazon, believe it or not, which we haven't seen anything in this for a while. But, and then there was a positive story out. But this was $9.6 million in option premium going out to February. So that is something notable, right? So what else do we see? A little bit of AMD, the usual stuff, momentum stuff. Keep in mind, after the first hour of the day, right? TDD, we saw some calls in. I mentioned Hilton. We also saw a little bit more Hilton today. CGNX, which I bought a little bit of these. They did not work. KDP was a repeat name today. BIG saw some calls. CPRI, STNG. More speculation in this name that's getting run over. SPCE. So somebody thinks it's a good value here, apparently. What was the last name I was going to mention here? I forget what it was. I think I was talking about the hotel names being very strong. This MAR, I think, is going to the VPOC. But again, a lot of these names that were. Oh, I was going to talk about the S&P today. It was one of those things to try to be careful, like how much you're going to trade today. These days, like today. And I would like to see continuation after today, right? This was a really nice move, and we all want that, right? If we're positioned to the long side, but days like this, I'm a net seller, right? When we have something where all of my positions, or not all, but most of them are working really well, I end up selling a lot more than buying. I think that's also, one of those things that newer traders do sometimes is once the market starts to move, they want to jump in because they've been waiting for it to move. What we did last week was I added some positions. I actually felt towards the end of the week that I had maybe added too much, right? Sometimes you always have those doubts. And I still have a couple of positions that didn't fire out completely. Like I'll be watching ITB this week, which is your home construction, right? So this is basically right back to where I bought it, but I'm looking for a breakout in the home names at this point. But that's basically what I did last week into the chop, was put on a few different swing trades. So that's basically how it works. You take them off into strength. and then you kind of rest, and it's the old rinse and repeat. All right, guys. So that's it for today's video. Have a great night, super day, risk on day, and we'll see you tomorrow. I do anticipate volume, as always, in a holiday week starts to, like, the beginning of the week is usually the heightened most amount of volume, and then it kind of trails off as we go through the week. Remember, Friday's holiday, and Friday is a half a day. Have a great night, everybody.